Good Thursday morning, Market Chameleons. Everyone join us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market webinar. Before we get started, let's take a look at the shared disclaimer. Be aware that Market Chameleon, Dimitri, and ourselves are not registered investment advisors or broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This show, as all our shows, are for informational purposes only concerning Market Chameleon tools and products. With that, good morning, Dimitri Pargamanik.
Good morning, Will. How are you?
Good. A little housekeeping note. Tomorrow I am away, visiting my mom in Florida with a couple of the children. So we won't be doing a show tomorrow, and I come back on Monday. So we're going to try to potentially do one in the afternoon, depending on how our schedule goes. But definitely tomorrow we will be having no morning webinar series.
Yeah.
All right, Dean.
Yep.
What are we looking at this morning?
So
Analyzing Nvidia in some way?
so we're gonna take a look at Nvidia, and we're gonna analyze the option order flow sentiment report. Just to
How do we
answer
get to that?
questions. So if you type in a stock symbol up top like this, you will end up on a summary page. Actually, you'll end up here on the summary page. If you go on the left-hand side under the menus and under options, the order sentiment. Okay. And then you'll land on this option order sentiment report. So I'm going to close the menu just to expand the screen. And in this report, what the report is analyzing and attempting to do is analyze the option trades and convert that volume into, instead of just option volume, it converts that volume into a delta volume, because options, they have different risk sensitivities, and one of them is the risk to the direction of the stock. And if we look at the option pricing model, we could calculate the delta of the option, which is the option's price sensitivity to a dollar move in the stock up or down. And this gives us an idea of the option order flow in terms of the directional risk that the initial trade of the initial trade. Now, of course, you have two sides of the trade. You have a buyer and a seller. So then the next analytic is to try to determine or infer. Okay, so we don't know exactly, but we try to infer which way the incoming order flow is going. So when we look at options, there you have many different players in there. You have customers, you have dealers, you have professional traders, and you have traders that are putting in marketable orders. Some traders are putting in limit orders that tighten up the markets. Sometimes you have resting orders on the book. So, for example, you have a limit order that's above or below the existing market, but as the market moves, it could go and take out that resting limit order. So there's a lot of stuff that's going on, and the analytics here are trying to analyze those markets to try to determine, where the incoming orders are coming, and it's basing it on like the surrounding data, including, the bids, the offers, the trade price, the implied volatility, the surrounding markets, the average spread of the bid and offer and how it's changed. So it looks at lots of different factors, and then it tries to infer that the incoming order was either, coming from the buy or sell side in a call or in a put. Okay. So for example, if the incoming order is coming from the buy side in a call and it gets executed, well, that would be a positive delta in our situation. If the incoming order is selling a call, that would be a negative delta. And same thing with the put. Incoming order is coming in from the buy side, taking the market. That would be a negative delta. Selling a put would be a positive delta. So then we have these deltas, and if we aggregate them, that's what this is. We could get a sense of how that order flow is looking in this particular stock. Does it look like it's going more towards the bullish side or the bearish side? All right, so that's what we're trying to answer with the market order flow sentiment here. So let's take a look at this report for Nvidia. Okay, and this is for yesterday's trades. We're not open today, so these were coming in from yesterday's trades. And this top part here tells us what the total imbalance was. So if we take all the bullish trades, so you could see here, these were all the bullish deltas. Here are all the bearish deltas. So if we sum them up, right, we'll get the total imbalance. Is it more positive or more negative? So here, if we sum these up, you could see it is a positive 7.7 million deltas. Okay, so based on our methodology and inference, it looks like a more bullish positive deltas in Nvidia. And here, this just gives us the breakdown, the chart of the percentage of bullish deltas versus bearish deltas. Since we have this total, you could see kind of how we put it in the chart. So this way you could kind of see, if it's overwhelmingly bullish, overwhelmingly bearish, or kind of like, just somewhere in the middle. As we go down, we could then analyze this further, right? So you could see here that this dashboard analyzes from different perspectives. Then this next analytic over here, 35.2%, is taking the total option delta volume, okay, and from these numbers, and then dividing it by the total stock volume. Okay, so that's what the ratios, the total volume coming in from the options relative to the stock volume. And this gives us an idea how active the options markets are on a relative basis to the stock volume. Or is half the volume in the options in terms of delta, relative to the stock volume, or is it 80% or so forth? Or it could be very little. It could be like 1%, which means, the option deltas are not that significant in the overall scheme of things. So this shows us that, the options are pretty active on a relative basis. And Nvidia represents, on the delta volume, about 35% of the stock volume. All right, so that gives us that indicator. These we just talked about, it'll break it down, the total positive deltas and total negative deltas. So then we could just see the breakdown over here of what made this up. Then we have these reference prices. And these reference price is based on a volume weighted average price. And it looks at when these bullish deltas were established, what was the stock price? Okay. So if there's a buyers of call options, well, where was the stock price at that moment? Right. And then what we do is take the average of all of those weighted by the delta of this trade. So we could get a sense of where were the most of those positive deltas established. So here it says $144.92. So this kind of helps us compare the that price versus the current price. Were these deltas mostly established below or above the current price, or here, sorry, this was the current price yesterday, we're close. Close to it, and that gives us information. Maybe there was a lot of delta when the stock was lower, scooping it up, and then as the stock ran up, the trades weren't as aggressive, or maybe the deltas are following the stock price on, as the day progresses. So this is kind of just letting us know how close the current price is relative to where those bullish deltas were established. Then on the flip side, we have the bearish deltas. So same thing, we could compare that to the current price. We could also compare them relative to each other. And what that could indicate to us is, are they far apart or close together? In this situation, it looks like they're very close together. Only a couple, cents apart, right? And what that indicates is that looks like there's a lot of trading going on around, no matter where the stock price is. They're close together, right? Because if they were like dollars apart, it would suggest, well, at one price the deltas were overwhelmingly bullish, and then as the stock got to a different price, they were overwhelmingly bearish relative to each other. But here, this kind of indicates that as the stock price is moving, you're getting a kind of more balanced order flow, because those weighted averages are close to each other. So let's keep moving on. And then we come up with this, then we come to this graph. And this graph, it's a cumulative graph throughout the day. And what it does is starts to calculate the delta volume, and it continues to add the delta volume as new trades come in. So, for example, if there's a lot of bearish deltas in the morning, we would see this, we would see a big drop in deltas in the red. And then here, as the day went on, and it's not this big of a drop, but as the day went on, it looks like there's more and more bullish deltas on aggregate. And you could see it kept climbing throughout the day, and all the way up to the end of the day, it continued to go higher. So it gives us an idea throughout the day how that option order flow sentiment behaved, which here it just seems like, throughout the day, it continued to get more bullish. All right. If not, we could have seen a big spike. We could have seen a big spike down or a big spike up. But, here kind of like the slope from here to here looks like the highest, between 10:30 and 12:30, and then kind of like flattened out. All right. So that would be a graphical view of how that option order flow delta progressed throughout the day. So let's keep going and see another breakdown of that option order flow. When we look at the positive deltas, well, they could come from call buyers or put sellers, and negative deltas could come from call sellers and put buyers. So what's the breakdown of that look like? Is it coming from mostly call buying or mostly put selling, or, where is it coming from? So we have this net delta, and based on our, analytics and inferences, we see that the largest amount of the deltas came from call buyers, 35.2 million, versus call sellers of 24.2 million. And then we had put buyers contributed 12.9 million versus put sellers of 9.7 million. Okay, so here it shows that most of the deltas in general came from calls, but the positive deltas and the calls outweighed the negative deltas. Okay. So another breakdown we could look at is more granular. Well, which particular options contributed to the highest delta? Right? Where did the highest deltas come from? So here we have the top 10 options. So you could see here, January 17th 50 call contributed 2.5 million deltas. The November 150 call contributed 2 million deltas. January 16th 100 call, positive 2 million. So we could kind of see where there's action relative to deltas and the greatest imbalances. So this allows us to focus and go analyze those. If we want to see those specific options and what's going on, then we have those top 10 that we could go, and then analyze, see what's going on, see what type of, if there are any opportunities around those options or in that particular option. Okay. So that's what this top 10 is. I'm going to keep sliding down. Well, and go to the next breakdown. So this next breakdown looks at the size of the trades. And when we look at the size of the trades, there could be, small trades, but there could be very large trades as well that are contributing to the delta. There could be a trade that's, 1, 2, 5, 10 lot contract, but throughout the day they add up, where there could be trades that are coming in, 500 contracts, 1,000 contracts. So how does that look like if we split it up into buckets and looked at the trade size? So what we did was create 4 different buckets. We create the very small trade, retail trader. Then we get the retail trader that is not necessarily small, like 1 to 10 lot, but still retail size. Then we get a more proficient trader, or that is a little bit larger size. You'd have to probably get more approval to trade that size. And then we got the very big institutional traders, that trade the biggest size. So we get these 4 buckets, and then we look at the breakdown of that. Where is this order flow coming from mostly? It's coming mostly from retail traders, professional traders, institutions. How does that breakdown look like? So you could see here, 12% of the order flow is from small traders, 16.4% from retail, professional size, 12.8%, and institutionals trade looked like 58.7%. So there's a significant amount of institutional trading going on yesterday on a relative basis. Kind of makes sense because there was also earnings, right? So we have to keep that in mind, that yesterday was the day right before they announced earnings. And in addition to that, we have these bars. So what these bars are telling us is that we see what the breakdown is of these traders. Let's call them trader types, right? Trader small, large, on the day. But how are they looking on a relative basis if we looked at average daily volume? Or maybe the amount of institutional trading was high relative to the other trades, but in actuality it's usually much higher. So this is what these bars show us, and it's a breakdown by today's notional dollar value of the trades versus the 30-day average. So you could see here that the 30-day average are in these gray bars, and then we get this blue bar showing us today's. So once the blue exceeds the gray, it's showing us that on a relative basis, today's trading is much more significant. Like you could see over here, institutional, where the gray bar stops there, right? Average $506 million worth of options traded versus yesterday's 1.1 billion. So that's just letting us know the significance of yesterday's trading relative to average daily. Okay. And this is in dollar terms. So then we could also break down it by on balance delta volume. And what this lets us do is say we have this aggregate, right, that's showing up bullish, right? In aggregate, we're seeing that it added up to a positive 7.7. But what if we broke it down into trader type? This could have come all from institutions, and everybody else looked like on aggregate was negative delta. So how did the sentiment break down if we just looked at it from trader size type? So we put them in different buckets. Yeah.
We got a question from Stefan, who's new to the online Market Chameleon community. He's asking, that buying of 50 calls seems strange being so far OTM out of the money. What could be the motivation for something like when thinking about a trade like that? What type of motivation would cause someone to do that? He's asking.
Um, I mean, I wouldn't be able to tell you what, the intent of that trader is. And we could go analyze the markets a little bit more if we wanted to go in there and maybe try to figure out what could be going on. But it could be, if I
Well, it's got earnings coming up, right?
huh?
It's got earnings coming up, or
It
did
could
it say
be
we have
it could
earnings?
be earnings coming up. It could be somebody closing out of a position, rolling up to a different position. We don't know, we don't really know exactly what's going on there.
We don't know what the person's or the individual or the company's full book is, right?
Yeah,
Are they
it could be
they could
somebody
be trying to protect a position, they could be rolling out of a position, they could
closing out of a position.
closing out of a position.
We're
Yeah.
just looking at that trade, right? So we couldn't follow everybody, or we don't know everybody's true intent. It could be hedging against something else. It could be, that's difficult to say. We could probably, go to the options chain and see if there was anything else around there or open interest that could contribute to it. But yeah, it's a little bit unusual because it stands out. It's further away from the monies, right? So you got $145 stop, and you could see these trade closer. Here's one 100 call, January 16th, 2026. So I couldn't tell you for sure, what the intent is or motivation. We just look at, well, this is what traded, and we analyze it from that point. Well, based on this trade, we're looking at the surrounding markets at that time and converting it to a delta volume. So that's what this report does. And if we saw maybe I don't know if there's doesn't even pay a high dividend. Sometimes you see dividend spreads, but I don't think that's the case here. So let's continue on this report. Sorry, couldn't really give it a definitive answer there because there is none. Um, so continuing on this report, what we're doing here is breaking down that delta volume, but we're separating it now into buckets. We have these four size traders: small, retail, professional, institution. If we separate them and say, well, look at those separately and let's compare them to each other. And you could see here that on balance, they all look like positive deltas, right? They're all green. And the institution, contributed the greatest amount. But it looks like, from all of those buckets, they were all on balance positive. Okay. And we only have a couple minutes, so I'm just going to go over these last two. Here, we look at the deltas, but based on how far away the strikes are from the spot price. So if most of the deltas are kind of like at the money, we will see them closer to zero. If most of the deltas are out of the money, you know, like percentage away, then they will appear here. So here, and that's the, you know, maybe what the interesting part to look at, somebody just brought up, is that based on those analytics, that a lot of those positive deltas were coming from strikes that were below, but were deep in the money, right? So that's what this is indicating, that those strikes were deep in the money. And as we could see here, you know, we have 150 call here, we have 100 call here. So, you know, that's something to maybe consider and take a look at. And then this last bucket over here, the analysis, is showing us the deltas based on how many days away to expiration. So if a lot of the deltas were in the short-term maturities, this is less than 5 days, we would see that this bar would be the highest, right? But what this is showing us is that there are two, you know, if we look at it, two of these bars stick out. One is that, you know, there are a lot of deltas coming from those options that are between 30 and 60 days. So like, you know, the monthly to the next month, 30 to 60 days. And then we have the next bucket, more than 120 days. All right. So that's what this has shown us, where the majority of those deltas look like they're being established. All right. So that's kind of the breakdown of this option order flow sentiment. And if you slide down here, this looks at the aggregates by day. So just like we had the, you know, aggregate for yesterday's November 20th, this just kind of lets you scan with your eyes how the, you know, most recent history looked like. So that sums it up well.
That's awesome, D. Great job. We're right against the opening bell. It looks like a minute away. Great job. As always, just a reminder, we will not be having a show tomorrow. I'm away. I will be coming back early in the morning on Monday from visiting my mother in Florida. So we'll try to potentially do an afternoon show, though that's not guaranteed and there's no scheduled time as of yet. We will for sure be back next Tuesday with our regular morning webinar series. Great job, D, as always.
All right. Thanks everyone for joining. Stay safe out there. Have a great trading day. Yep. And hope to see you guys next week.
All right. Trading Peace Chameleon. Bye-bye.